Good morning or afternoon, if that's the case. I am Matt Lisle, and I will be moderating this panel. Today, we in the industry are confronted with legal uncertainty in connection with the digital assets industry. Governments are indeed struggling with how to approach these topics, with some still trying to determine their approach, while others, like Switzerland and Malta, have established specific laws designed to regulate digital assets. In the meantime, many stakeholders are concerned about the risks entailed in certain areas that remain largely underregulated or within a very gray area, and hence susceptible to fraudulent schemes or market instability issues. For instance, should stablecoins be required to have sufficient reserves to be able to adequately handle a run on the bank scenario? Or should there be more strict regulations on service providers? Finally, like almost all businesses, the digital assets business is global and stretches beyond national boundaries. Addressing these questions, the panel will examine how guidelines and a code of conduct can be broadly agreed upon and whether they will be sufficient to drive widespread adoption of these new forms of value exchange. So first, let me introduce our panelists this morning. With me are James Gatto. He is the blockchain and fintech leader at the law firm of Shepherd, Mullen, Richter, and Hampton. And I also am joined by Dr. Justine Herrera, partner at MK Fintech Partners. Now, I will turn to each of you and each of you of my distinguished panel and ask you for a little bit more of a description of who you are, your experience, especially with respect to the topics that we're going to be talking to today. James, why don't you start?
Great, thanks, Matt, and hi everybody. So my background, at a high level, I've been doing IP and tech work for almost 30 years, or just over 30 years actually. And so I have focused historically on games, interactive entertainment, and a lot of fintech work. I head up our blockchain and fintech team and been doing work in the blockchain space since about 2012. One of my former clients became general counsel of the Bitcoin Foundation and kind of got me sucked in and started going to the conferences and everything. So I've been doing work in the space for about 10 years. And we help companies with not only the IP side, but of more relevance to what's going on today, the really kind of the tech regulatory issue and understanding the legal issues that apply to blockchain, NFTs, crypto, and all the other things that are going on, as well as kind of governance within metaverses. I did a lot of work back in the early days of virtual worlds. A lot of that I think is going to be applicable to what's going on here. So there's a lot of precedent that we took away from that time period. So that's just a little bit about me, and happy to be on the panel here and look forward to discussing these interesting issues with you and Justine.
Thanks, James. Appreciate that. Justine, I'll turn it over to you. If you could give us a little bit of a background about yourself, especially with respect to the relevant topics today.
Okay, perfect. So my full name is Dr. Justine Herrera, and I'm a lawyer by profession. I'm based in Malta, which is a very small island in the Mediterranean, for those of you who perhaps aren't so familiar. So my background is primarily, I used to work in investments and banking. So I used to work for an investment stockbroker, a top tier one called Exante. I used to work for a credit institution, ironically a bank, about 5 years ago. And then about 5 years ago, Malta started regulating and putting together a virtual financial assets framework. And I was involved in the consultation papers and applying my traditional banking and finance background to the crypto asset sphere. I was then headhunted by a top-tier international legal advisory firm called Michael Cipriano, where we set up a specialized entity called MK Fintech about 5 years ago. And we obtained a virtual financial assets agent license, which is the necessary license you need in Malta if you want to service crypto clients or advise them in this space. And now basically I head the fintech and crypto team, and on a day-to-day basis, I would say that I do a lot of work in structuring, advisory, consultancy. So whether the activities fall inside or outside of licensing, if they need to get regulated or not, and interpreting various laws, and also keeping an eye on what's to come. So there's a directive called MiCA, which is on the horizon, and this will be implemented in 2024. And when it does, all the member states of the EU will need to transpose this into their national laws. The Malta regulation is currently very, very similar to the MiCA directive. So I don't think we'll have too much stress in terms of applying it in the jurisdiction of Malta. But basically, my background is a mix of fintech, crypto investments, and the last 5 years I've been involved in a few crypto-related projects.
Thank you, Justine. Let me give you a little bit of a background about me as well. Currently, I'm a director in the legal department of Galaxy Digital. I have practiced in the financial services industry for 25 years with a particular focus on U.S. derivatives regulation. In a career twist in 2018, I, along with 3 other derivatives industry veterans, founded a lending company which focused on lending fiat to borrowers collateralized by cryptocurrency. Our model leveraged our derivatives hedging expertise, and we developed low interest rate, non-recourse loan products using hedging techniques. We also developed a couple of commodity pools designed to leverage the high volatilities in the crypto markets. So essentially, we were set up to leverage our options experience, and in the crypto area, especially, if you've paid any attention, they're highly volatile assets, and that means that they are very interesting for options traders. Maybe of more relevance to this panel, however, I also have a side job or a night job as one of the founders of a nascent self-regulatory association called the Global DCA. The Global DCA was launched in 2020 and envisions setting up standards that will be binding on its members who are members of the digital assets industry. The standards are going to be developed on a committee-driven consensus basis. In other words, a committee of experts will be established to establish rules governing industry activities. The committee will agree on a set of standards subject to board approval. The board will then approve. It's essentially one member, one vote. This takes place in a very transparent way. No member, because it's a one member, one vote policy, no member can dominate the process. Adherence will be voluntary because under the model that we're setting up, there won't be any sort of government mandate or fiat. Here in the US, people are used to FINRA or the NFA overseeing a lot of the entities that are in the financial industry space. Those are entities that were established by legislative mandate or act, and they have what you would call, I guess, pseudo governmental authorities, which includes the enforcement authority for enforcing their laws and rules. We will not have that. So adherence will be voluntary, and members will be subject instead to an arbitration system in case of disputes, and of course, expulsion for failure to follow the rules. I can get more into this as we go along when it becomes of relevance. But at this point, I think that we've provided a substantial or adequate enough background of each other. But I think as we go along, we'll probably be delving in more and more into your expertise, your particular expertise, and what you can bring to this panel in terms of some substance and some takeaways that we can get here. So without further ado, my first question, and I'm going to direct this at James, first of all, but I'd like Justine to add her thoughts as well. So my first question is, do you believe that a regulation can enhance a developing industry? Just generically, do you think that regulation is good for a developing industry?
I think prudent regulation is. I think the current status in the US right now, unlike some other jurisdictions that are more advanced, like Switzerland, I think Malta, there's too many different regulators in the US that have, or at least claim to have jurisdiction over different aspects of crypto and blockchain. And they really haven't created new rules. Most of them have issued guidance as to how laws written many years ago apply to the technology that didn't exist then, that does exist now. And I think as a result of the current situation in the US, there's a great deal of uncertainty. And I think that, when I say prudent regulation, I think that for the most part, a lot of the regulators haven't gone too far yet. I think for fear of, they don't want to kill the industry. They recognize the potential of the technology, but the lack of clear guidance and the lack of regulation that gives a clear path forward on certain activities is stifling. And so I think the biggest benefit that we will get when and if there's clear, prudent regulation is that so many of the big players right now, big financial institutions and others, aren't in the space because of the uncertainty. It's all Web3 companies. It's companies that don't have an existing business to protect for the most part. And so it's really taken off even with that. But once you get all of the other big players in, the industry is just going to grow exponentially, in my opinion.
Thanks, James. So Justine, James mentioned that Malta has developed a fairly sophisticated approach. If you could give us a little bit more of an overview of that approach, and then also your opinion as to whether it's working or not.
Sure. I'm just going to make a note. So about 2018 November now, Malta passed or made 3 bills become acts, and these basically regulated crypto asset issuers, crypto asset service providers, and they also set up a couple of authorities. So anyone which is a crypto asset service provider, so if you're an introducer, a broker, an exchange, a custodian, there are specific licenses which you could apply for, and these have good governance requirements. They have policies and procedures, minimum share capitals. So many of the requirements are similar to licenses of the investment services provider. So when it comes to custody or brokerage or exchange. They also developed rules for issuers. So if you're an issuer, you want to market or launch a new token on the market, there is a test, so a sort of token categorization test or the financial instrument test, which you could take to determine what type of token you are issuing. So if you are exempt, if you're a financial instrument, if you're a virtual financial asset, which by definition is an asset which is not e-money, not a financial instrument, and not a utility which cannot be traded. So there is sort of guidance in terms of token classification and people who want to issue on the market and crypto asset service providers. There is also another complementary regulation, which is called the MDIA. So there's a Malta Digital Innovation Authority. And basically every time someone wants to apply for a specific license or issue a token on the market, in addition to applying to the regulators for licensing or registration, they also need to apply to this Digital Innovation Authority to get their systems audited. So if you're offering a platform which involves technical arrangements, so blockchain, smart contracts, and wallets, you need to get these arrangements audited before launching on the market, which I believe is although can be costly, is a good element because you are protecting your investors and the market at large. So we have a good framework in place. Obviously, it did take a while to actually execute in terms of all the persons on the ground, from lawyers to accountants and regulators, becoming very familiar with this regulation, and then of course carrying out and obtaining the relevant licenses. Now we have some big names which are regulated in Malta, like Exante, New Fund, Crypto.com, and we have more big names which are being attracted to Malta solely because there is this jurisdiction. Obviously, regulation is on the rise, so anyone offering a service, or let's say the bigger players, are drawn to jurisdictions where they could obtain a certain license. Now, if regulation does enhance an industry or not, of course, it very much depends on the regulation, how stringent and flexible it is, and the regulators are. But I do believe that regulation will validate certain markets. I mean, for example, in the DeFi space, in the last couple of years, about 75% of the hacks which took place in DeFi, in cryptocurrencies, were on DeFi platforms. So, of course, this does, have a notable effect and have a consequential effect, meaning the reason being is because of a lot of these operators are operating in gray spaces where there's no regulation, maybe there's no regulated custodians, no insurance, so they're more susceptible to hacks. Obviously, a middle ground is the utopian vision or the ideal, and time will tell if that can be obtained.
Okay, well, that's quite a mouthful. And I think
stop me if I talk too much. So,
James,
but there is a lot to say, of course. But
yeah, no, of course there is, and I'm going to come back. James and I would definitely agree that that's the kind of specific guidelines and regulation that we could use here in the United States. There's particular political reasons why we have not gotten that yet. There are so many stakeholders in the space to begin with. There is a lot of stakes at hand. And also you have a specific, we have a regulatory regime that diffracts and tends to not be able to get along well, let's put it that way. So there's a lot of regulatory turf battles that happen in the US Congress.
The US is you know, a very large continent and country, unlike Malta, which is very small. So it's much easier to come, you know, and come in, put a whole regulatory framework and enforce it on the country, because the population is under 1 million. So even though we form part of the EU, we're sort of independent, national, small. So, you know, it's much easier to execute something like that.
Yeah, I bet. And then that's where I want to go now, because you mentioned that the EU is going to be putting something in place in 2024, which is actually, you said, is going to align quite a bit with the current Malta, framework. But I can imagine talking about political stakeholders. It's never easy to get anything through the EU. Is this something, A, that it's been passed, and B, that it definitely will be implemented? We've seen things like ESMA that have taken, you know, almost a decade or more to really get, you know, full-fledged and
yes,
in process. And also, but it also ends up being so onerous and burdensome that,
definitely,
you know, for a innovative kind of an industry, a young nascent industry, can provide a significant barrier to entry.
No, those are all very, very and good points. Of course, the EU's goal or role is to basically create a single union with one market and all services being allowed to be passported, so without barriers. They've seen a lot of activity in the European Union. There's obviously a lot of fragmentation because there's some countries which are regulated, some which are sort of becoming regulated or have some form of registration which you need to comply with, like Germany and France as of recently, and the UK, but the UK aren't really in now because of Brexit. And then some countries which have zero regulation. So they're trying to pick and choose the best sort of parts of the regulations which are already in force in certain jurisdictions, obviously make it in line with their vision and their other directives, especially those which concern securities or e-money, and basically create a whole framework. This is currently it's a proposed directive, it's not passed yet, but there are talks that it will be passed and become law in 2024. And when this happens, then it will have to be transposed into all member states. I'm guessing there will be some transitionary period, because if there are operators already on the ground, then they will, be given a grace period in order to comply, which will make the most sense. However, having said that, I've read MiCA, which is a 160-page document, and there are some parts which I really agree with and I think would be great for the crypto market, but some parts I absolutely don't at all. But of course, the EU are protecting their interests. So to go back to what you mentioned at the beginning, you said stable coins, and you mentioned how there's a systematic risk and how regulators are sort of on the watch in terms of what's happening, with stable coins. MiCA, in very small print, halfway through the document, basically ban any stable coins issued in the EU from bearing interest. Of course, this is because they present a direct competition to central bank digital money, which I completely disagree with, because I believe that you should allow the consumer to choose if he wants to have his money held with private actors or with public actors. So allow stablecoins regulate, but don't prohibit interest-bearing coins. And I thought that was really cheeky, and I'm hoping that by then they remove it, because many issuers will just be driven to the US markets and issue, or other markets and issue stablecoins in those markets. So that is something very close to my heart, and I'm going to try my best to advocate against this provision. Now we'll see.
It's really interesting stuff, and it sounds like you're having the same sort of questions and struggles in the EU as we're having. James, you mentioned right up top that good regulation is prudent regulation. So I'm going to put you on the spot and ask you, maybe just in a general way, to make a couple of points as to what you think is prudent regulation. I'll also point out that, I think that there is a struggle in the EU, as well as there's going to be in the US, in terms of supporting innovation and competition versus protecting retail customers and the like. So if you could share with us a couple of your thoughts as to what you meant by prudent regulation, and by that meaning that would be a good thing for the industry.
Yeah, so I think there's many different topics. So I'll just kind of give an example. I mean, I think you have to start with the kind of the policy behind regulation in the first place, right? And so there's some competing goals, right? You want the regulation to be flexible enough that technology and business models can adapt, and it won't outstrip the regulation. And so part of it is not being overly prescriptive. So you mentioned, for example, with stablecoins, should they have to be backed by a certain amount of assets? I think no. I think there's algorithmic stablecoins. I think what's important is that there be clarity, a requirement that there's clarity, right, as to what you're buying with a stablecoin. If there's assets like Tether, right, is there actually the assets that you disclose? So that level, I think, is important. Or if it's algorithmic, what's the algorithm? And people can look at it and decide, is this something I want to get involved with or not? So I think at that for that one example, I think, that's kind of, the level I would say. But when you look more broadly, you have a number of interests to take a look at, right? There are consumer disclosure and consumer fairness, and all of that is always an important part of you don't want people to be defrauded. It's not about ensuring people make good investments. It's about ensuring people have good information, and they do with what they will, right? But if there's an information asymmetry, as is often talked about, that's when people can get whipsawed in financial markets. So that's one thing. The second thing is, so you look at like ETFs right now, like people have been trying to get like crypto ETFs, and the SEC is not approving them, but they're not giving guidance saying, okay, what will it take to get them approved, right? And so to me, that's a failure on the part of policy right there to, provide. People are trying to comply. They're not trying to create ETFs that are defrauding people, but they're not getting them approved. And it's just like, well, there's not enough disclosure, or there's not enough safeguards. Okay, well, what are those things that you want to see in an ETF to make them, be approved by the SEC? And you also have, of course, there's, other layers of issues. And, you mentioned self-governance a little bit. And I think, there's a certain amount of self-governance that can work if there's industry standards that are adopted. You can have part of that be, part of the regulatory scheme. If you look at like what the FTC has done in the US with privacy, I mean, there's not really rules or regulations. There's industry standards, there's, best practices, and there's stuff. So but then there's things that kind of cross the line. And if you do certain things, it's, clearly is going to be illegal. So I think when you bring that to the crypto space, there's elements, I think, where industry regulation or industry self-regulation can apply. But I think when you go to some of the policy considerations like money laundering and sanctions avoidance and things like that, there's got to be, that's not going to be self-regulated, right? That's something that the regulators are going to, there needs to be greater clarity. And the problem we have in the U.S. is that there's been guidance, but there's no clear regulation, no new regulation that makes things specifically applicable to crypto. So to answer your question, I think there needs to be a balance of all these things. I think the regulation needs to be flexible enough to let business and technology expand. You need to, ensure consumers are protected, but that businesses can do what they want to do and just make sure there's the right checks and balances along the way to kind of bring all that together.
Yeah, thanks, Jim. So you mentioned self-regulation, and I'm going to do a plug now for the Global DCA that I'm a member of and a founder. And there's a couple of things you should, high-level things that we start with. Number one is anybody that spends a minute in this space understands and knows thoroughly that there is a lot of legal uncertainty, as we've been pounding away on right now. And so your first impulse is to say, well, what is the government or regulators going to do? And they haven't done anything, at least since I've been in the industry, except for enforcement actions here in the US. Malta certainly made strides. Switzerland has put things in place, but those only apply in various jurisdictions. And if you go offshore in any of the other jurisdictions, you're going to have these issues. And so you've got this uncertainty, you've got this dithering around by regulators. There's delays. I think they're going to get around to it, but there are delays. And then you have a couple of dynamics. Number one, you have as I mentioned, a global scope of the business. And it's a very, very modern technology-oriented business. It's very fast. It moves very fast. And so what I like to talk about is Moore's Law. And if Moore's Law is in play here, as it is with all technology, it means that, you're going to see a new technology every 18 months, right? And so you've got this dynamic in play. When was the last time you saw a legislative body move in that time frame? I'm going to, jump to the answer. You've never seen it. And so it then comes to mind like, well, who can be best in place to do this? Well, it would be an industry group that would be self-interested. This is a model that is not new. It's been around for a long time. One of the things that I did in one of my previous jobs, I was general counsel of what they call the National Grain and Feed Association here in the U.S. And it's the trade association for all the grain businesses here in the U.S. We're talking about very large concerns like Cargill, ADM, Dreyfus, and so forth. And they all voluntarily agreed to abide by a set of trade rules. So all grain that is bought and sold in the United States, these large bulk shipments, are governed by a set of trade rules that an association committee comes up with and maintains. That's quite a thing, and they have an arbitration system that will then enforce those rules between members if there's a dispute. So this standard is there. It's there in other industries. There's also an FX code of conduct, which at first it's been voluntary and people kind of ignored it, and to their peril, because the FX industry saw many different enforcement actions against it. And to clean it up, companies started to look at those codes and standards as a way to sort of navigate their way through this mess and through the reputational hazards and damage that had happened. So there is a model, and there is a definite incentive for companies to adhere. It's not perfect, but is anything? No. But it will be able to pivot and be flexible enough and to act quickly enough to be able to address changes that go on. So that's our philosophy, that's our theory. What does that require? It requires two main things. It requires member buy-in, and so you have to have most of the industry coming in as members and agreeing to abide by these rules. And secondly, you have to have regulators who give it or grant it credibility. And those things take time. They take a long time. So this is an effort that will be long and grinding, but we think we can get there. So you look at things like Justine mentioned custody. for example, or insurance in this space. What is an auditor going to do or an underwriter going to do when it looks at this space? It's brand new. There's a lot of intricacies and complexities that don't have a natural analog in the traditional space. So if you can act like the ISO, for example, and come up with a standard that will be fit for purpose, that will help auditors. That will help underwriters to assess things, and then that will bring down costs of those activities. Those are just a couple of examples that I throw out. Anyways, let's switch our attention to
Can I just comment to that real briefly? Because I think that's really interesting. I think a couple of things I would just observe, though. One is, I think industry best practices, players in the industry know the technology, the business, the problems, and the opportunities better than any regulator. And so I think industry best practices are a great thing. And as you say, there's things that will work, the things that need to be adapted. And over time, what are industry best practices in part can be incorporated into regulation. The challenge, I think, in the blockchain space compared to your experience with the Grain Feed Industry Association is that when you're dealing with big players like the Cargills and ADMs, these big players, they need to be like on board if they want to be industry players, right? The challenge you're going to have in crypto is that there's a lot of small anonymous players that aren't going to be interested in self-governance or any governance, right? They just want to make money, and it's hard to get the entire industry on board. And I think that's where the balance is. Like the industry leaders, like the Coinbases and the Galaxies, and all these big players who are trying to do it right and want clarity, absolutely, right? They're going to be the drivers of industry standards. But I think that the long tail is the challenge in this industry, because it's not all ADMs and Cargills.
Totally. Yeah, I'm with you there, Jim. Justine, did you have any comments?
No, it's an interesting approach for sure. I think we do need more of these sort of, task force or associations which provide guidance or clarity, maybe even more sandboxes and whatnot. But for one to replace the other, I agree in terms of the small players. It's a very good point to mention. They're not going to be interested in joining and driving it. It would be good if you have industry leaders who form some sort of association or task force and work together with regulators to come up with some practical approach. But of course, when you're speaking about the smaller players, those are sort of don't want regulation at all, and they also advocate on self-regulation and thinking that it's not necessary. So you have all sorts of persons, those who sort of skeptical towards regulation and anti-government, those who want to be regulated because they sort of massive platforms and they want customer adoption, and those sort of floating in between that don't afford it, because obviously when we speak about regulation, it's very costly. If you want to do something in the space and you do have a very good team or project, and what's the next sort of issue is the funding, because many times you need a minimum share capital, you need a team of persons, you need a regulator license fee. So this is also one of the reasons which drives persons away from regulators, because they can easily deploy a token or a platform and offer something, but they just don't afford and then to regulate it. So I would say also to offer sandboxes which offer a sort of free, healthy, legitimate working environments to assist with proof of concept, and this will and then assist with, let's say, getting funding, and then assist with actually getting regulated. So also more of that in this space.
You two are talking yourself into potential members in this association, because we are looking for thought leaders with just that ability to see through what is necessary. We are struggling. It's an existential struggle. Every day I wonder, well, is this going to work? Is this really the right thing? And for those very reasons that you just mentioned. With respect to, whether or not the big boys will play with you and or are they really for regulation? Guess what? It's coming whether you want it or not. So perhaps you should get together sooner rather than later to try and really, dictate how the outcome is going to be. So, we have, there are historical precedents here. Web 2.0, the dot-com boom, you had a bunch of cowboys cowboying. You had people thumbing your nose like Bill Gates or Steve Jobs, and trying to play fast and loose and so forth. You're seeing Elon Musk, do some, try and move markets and things like that. And in the end, what happened is they all sort of had to get religion and come back into, the tribal lands and start to make peace. So, that is one of the things that we talk about. So we need to right now set up the infrastructure, set up the governance, get the membership going. In 1 year, we've gotten, this time last year, we had no members. Right now we have 60. So it's pretty fast growing. And for, Justine, you said for the small members, it makes sense. Yeah, most of our members are smaller businesses.
Okay.
But in terms of making that pitch or making yourself credible, one of the things that you have to do is to actually go and do it and prove that you can do it. And so that's why we're, looking for thought leaders like yourselves to help us do that. But that's another conversation. So,
and also to add on, the issue is that, why regulators haven't regulated, why we don't have clarity on many subjects is because of the rapid speed of innovation. For example, when MiCA was drafted, NFT and metaverse weren't a thing. Once the draft was all public, they realized that NFTs weren't covered, non-fungible tokens weren't covered. So, because obviously at the time it was drafted, they weren't really a thing, or they really haven't boomed. So is the regulation always going to be edited and amended every time there's a new concept, a new sort of, a new way of doing things? Because that is also one aspect why there's no clarity. It's one, it takes the regulators long to draft something which is practical and good. Two, once it's drafted, there's the next new thing which comes in. And three, there's also loopholes and way around it. You can sort of offer something which is like a stable coin, but you miss one of the features. So for the definition of the law, it's not a stable coin and you fall within the cracks. So, there's always something.
Yeah, no, I totally agree. I couldn't say it better. So because this is more of an NFT focused conference, I'll try and get us there. But my first is going to be maybe more of an intermediate question, and it's going to be concerning, a lot of these protocols, let's call them, these technologies are designed to be decentralized, right? And they are in direct contrast to what you see in the traditional finance world. So we have the terms CeFi and DeFi. Most of the regulation in the world right now is CeFi focused. There is a central party which the regulations focus on and require certain, things that they have to do, and will hold that particular entity liable for violation or non-compliance. Now we're seeing these protocols come out that are decentralized. They're designed not to have a central controller. So my question to you both, and I'll start with Justine, is have you given any thought to whether or not regulation actually needs to adjust itself from a paradigmatic standpoint or a new paradigm in order to accommodate these structures?
Mm-hmm. I think really what will happen is the other way around. So you'll have a decentralized platform offering decentralized services, but there will be some sort of integration with off-chain world. So via an Oracle or an API. So for example, a transaction is recorded on chain, but for KYC purposes, that's done off chain. So I think the projects or platforms will have to sort of come up with creative ways of how to still conform with compliance regulations and still offer DeFi services and activities. And there are very sort of a lot of new services and platforms which are offering, just these type of solutions.
Okay, Jim, what are your thoughts?
Yeah, I largely agree. I mean, I think that the technology and the opportunities are fascinating with DeFi and DAOs and all of the decentralized things that are happening. But I I've yet to come across a really good model that works with the existing regulatory landscape and that fully, right? And as Justine said, I mean, you can have hybrid models, but they're not, at the end of the day, they're not centralized, right? So even just with AML, right, with anti-money laundering, you either need to be licensed, at least in the US, you either need to be licensed or you need to work with someone who's licensed. So, you know, a true decentralized product or service can't really validly exist. And I think there's a lot of misperception about that. A lot of people think because there's no entity, the regulators can't take any action. Completely false, right? The laws apply. Different agencies have said if you deploy a smart contract, you're responsible for the foreseeable legal consequences. And if you have like a DAO, it's even worse because people think there's no entity. Well, a DAO is an unincorporated partnership for the most part, unless you put some structure around it, like what Wyoming permits and some others. But for the most part, it's an unincorporated partnership, which means everyone's liable, right? So I think there's a lot of misperceptions out there. And while I'm a big fan of the technology and the opportunities, it is difficult to fit within the existing regulatory scheme and do it in a way that's legally compliant currently.
All excellent thoughts. I'll throw in, Justine, I don't know how much you're aware, but here in the US, there's a particular debate, one of the more important ones concerning, you know, whether or not DeFi tokens are securities or not. The consequence of being a security is obviously, A, you have to abide by the regulations, and B, most of these protocols were launched without really you know, trying to comply with these laws, and therefore, are they legal or not? And you have a highly dynamic market going on right now, and a lot of good actors considering whether or not and how to I guess conclude or determine whether or not these are securities on their own without further guidance. And a big part of that legal test here is the US Supreme Court as to whether or not something is an investment contract is included as a security. And there's a well-known the Supreme Court case that defines, you know, what is an investment contract. And you know, one of the prongs is essentially, is this a centralized operation that is designed to, you know, essentially attract capital investment in order to develop the enterprise. And we've seen I don't know if it was an innovation, but I guess we could call it that. There was a well-known speech by an SEC high up director who by the name of William Hinman. And he essentially posited that if you look at Ethereum, which began life probably as a security, and then over time mutated, in his words, into a non-security or a commodity because ownership was spread out over the blockchain. And so, you know, partly here we're going to be struggling, I think, with whether or not that sort of decentralized notion is something that, you know, we can put more of a specific guideline around. Justine, I'm going to ask you whether in Malta or in the EU you've seen maybe more liberal or progressive.
Yes, I would definitely say so. So for example, Ethereum and Bitcoin wouldn't be classified as securities in Malta, and even in this new directive, which is about to come into force. So basically, we have four very clear categorizations when it comes to tokens. We have tokens which are called virtual tokens, and these basically are exempt from regulations. They have a utility, but they cannot be traded on secondary markets. So this is very important. If they cannot be traded on secondary markets and their utility, they're called a virtual token. You have the second group, which is an e-money token. So it's redeemed at par with a claim on the issuer against the issuer. It's a legal tender. Basically, it's e-money token, so some sort of stable coins. Then you have security token, so financial instrument determined by MiFID. So, you know, shares, bonds, commodities, which are freely transferable and negotiable, as we know them in the traditional world. And then the fourth, which is just native to Malta, the fourth group is called a VFA token, so virtual financial asset token. If a token is not a financial instrument, is not an e-money token, and is not a utility token which cannot be traded on secondary markets, then it is called a VFA token. So Bitcoin, Ethereum, BNB, all these tokens would be a VFA token. We have an act regulating the issuance and admission to trading of these tokens, which is primarily, a white paper, which a bunch of requirements in terms of risks, disclosure, and whatnot, and also that these systems or platforms have to also be audited. So this is the way we deal with it here. In terms of the EU, how they deal with it, they have primarily 3 classifications. One is an asset-backed or asset reference token. So it's an asset-backed token. The second, so financial instruments. The second one is e-money token. So essentially sort of like stable coins. And the third one is tokens which are not e-money and which are not financial instruments, but which are fungible tokens, thereby excluding NFTs. And these also have their own set of requirements. And that is sort of how we classify them. So for us, I know in the US, many tokens are deemed as and treated as securities, but here it's not so much like that. Of course, when it comes to securities, if you have, for example, a case, this is yet to be confirmed and interpreted, but this is the way I see it. If you have, for example, an NFT which is created, minted, and then offers fractional ownership. So imagine you have one asset, one NFT, or 2,000 ERC tokens. So everyone gets a slice of the pie in that way, and you are offering a return, then it could be interpreted and classified as a security. So also it's very much case by case basis, and the structure and the distribution and the marketing of it in terms of if it's a security, but it's not so black and white.
Okay, so if I am in Malta, just so I'm clear, can I buy Bitcoin? And where do I buy it from?
I mean, you can buy Bitcoin. So I think perhaps could you issue a token which is akin to Bitcoin, for example, would be maybe more relevant in terms of imagine Bitcoin didn't exist, okay? Or there was another token which became famous. Imagine Ethereum was the first Bitcoin and Bitcoin came later now, and you want to issue Bitcoin on the market, what would happen? So basically you would engage a VFA agent, so someone like myself, which is licensed to give crypto related advice in terms of if you fall within this licensing regime or not. And they did this to filter out the system to make sure anyone advising in this space gets it right, basically. And there was a very rigorous sort of exam and share capital and all that involved in getting this license to advise. And then basically would analyze the token, the features, would conduct this token categorization test, which is basically an Excel with a bunch of questions, which depending on the features and characteristics of the token and white paper, you would be able to respond to these questions. And at the end, you get the determination. Then from when you have the determination, okay, it's a security token. Okay, it's an e-money token. Okay, it's a VFA token. Okay, it's a utility token. You look at the relevant laws which would apply to that determination of that token. And then if it's exempt, if it's not exempt, what laws apply and all that. And basically most of the time you'll have to publish. So Bitcoin would be a VFA token and you'd have to publish a white paper, get it approved by the regulator, publish it, and then you can basically sell it, issue, trade.
I think with that amount of clarity, Jim, you and I would be put out of a job.
Perhaps.
Yeah, I don't know if there's a lot of gray areas, at least how Justine describes it. I'm sure it's a lot more complex than that.
Look, let me tell you, Malta is a very small jurisdiction. So in terms of resources and GDP and whatnot, what it has to offer is financial services and coming up with certain regulations. It could be before gaming, it could be cannabis, it could be crypto, whatnot, to attract foreign investment. Could be for tax purposes, could be for whatever. So we have to think outside the box when it comes to attracting investors or players, or increasing the attraction of Malta as a jurisdiction, because it's very small, even though it's part of the EU, and we have to have an edge over others. And this is why we may become out first and regulate certain sectors which other jurisdictions are a bit wary. Just to put you into perspective of perhaps why we were the first on the ground and how it sort of became.
Well, I hope it's working. And I think that, with that sort of progressive, out in front mindset, I hope that governments like the U.S. and the EU take something from the experience that Malta's had. Let me end up by sort of switching gears here and just focus on NFTs specifically. NFTs are one of the new things and one of the new kids on the block. Jim, you mentioned that you've been practicing for a long time in the entertainment and the game space. So I'm assuming that, you've looked at this quite a bit. Can you unpack for us, from the perspective of the technology and generally how it operates, what are some of the major legal issues with respect to NFTs?
Sure. So, there's this kind of mystery around NFTs. In my mind, they're actually very simple, right? The token doesn't exist, right? An NFT, which stands for non-fungible token, all it is a recordation of ownership of some asset or entitlement. And what that recordation is each token has a token ID and it gets associated with a wallet ID, and that gets recorded on a blockchain. And that just evidences who owns whatever asset or entitlement is referenced in the token, right? So if the token represents just a simple piece of digital art, it says, okay, I have rights to this piece of digital art if I'm the wallet holder that's associated with it. So when you think about tokens, there's the ownership piece, and then there's what does it reference ownership of? Okay, so that's the basic technology. That's really all you need to know about NFTs from a technology perspective to do a legal analysis. So then what gets interesting is what is the asset and or entitlements that token represents, that it gives the token holder. So again, if it's just a piece of digital art, it's just going to be an IP issue, right? Does the seller own all the IP? And then as a buyer, one of the big issues, and this is not so much a financial thing, but it's important on NFTs, is what rights do I have to a piece of a digital asset associated with an NFT? You typically own the token, you can sell it, but you may only have a license, typically a personal non-commercial use license to display the digital asset. Okay, now there are different models and people sometimes let people commercialize it, but the important thing is there should be a license that governs the asset. Okay, so that's one thing. To get to the regulatory side. So because NFTs traditionally, they've been around for several years, 4 or 5 years, because many of them historically were just represented a single digital asset, people are like, NFTs are not securities. As a general matter, that may or may not be true. You have to look at what is the asset and what is the entitlement. So people now, fast forward, so what are some of the issues? People are saying that they're selling NFTs that are an album cover from a song or a clip from a movie, and it gives you a share of revenue from the song or the movie. It's still a security, right? If what you're buying, it gives you a share of revenue, it's likely going to be a security. I don't want to say it is, but for the most part, so just because it's an NFT doesn't mean it can't be a security. And so you have to look at as the SEC says, the totality of the facts and circumstances to evaluate the legal issues and what may or may not apply. And as Justine said, there's a couple of categories of things that we've seen with NFTs that can trigger regulatory issues. So fractionalization is one. So that's where you have typically a high valued asset, multiple NFTs represent a share of it. There may be some revenue sharing with someone managing it. That's one scenario. Pooling is another.
Can I stop you there?
Yep,
there
sure.
was a big hubbub in Q4 last year about the Constitution DAO,
Yep.
where they got a bunch of on social media, they got a lot of interest in terms of hey, throw in some Ethereum into this pool, and we'll bid on the constitutional DAO. So
Yep.
that's basically the fractionalization that you're talking about.
Yeah. And so, I didn't see enough information about that to make a true assessment of whether it's a security or not. A lot was written about it and a lot of speculation, but, if there was no revenue associated with it and it was just a joint ownership of an asset, right, it may or may not be a security, right? There was no revenue stream associated with the Constitution, right? It was the right to display it. Now, if you started displaying it and charging people and there was revenue and you're sharing it, all right, now maybe you start getting into some of those issues. So I think they didn't win. They came close. They raised like $40 million through the DAO in a short period of time, and everyone got their money back, but for the gas fees, I believe, or something close to that. So we don't know. We don't know the answer. But again, it depends on the facts of what would that ownership have represented to the NFT owners. So just to finish what I was saying, so that's one issue. There's pooling. So sometimes there'll be an NFT that represents a collection of assets that may be from different artists, and there may be some revenue share that's getting divided out to the artists from the sale of the NFT. That can present a securities issue depending how it's structured. Another thing that we see sometimes is NFTs that are pre-sold for let's say you mentioned games. So as if you're selling NFTs that are really only usable in a game and they have no utility when you sell them, and people are selling those NFTs to raise money to build the game, might be a classic Howie scenario where that could be a security as well. If the proceeds of the sale of the NFT are going to build the platform, and the NFT is likely to be more valuable once the platform is built, you got the Howie factors probably met. And then the last scenario we see, as I mentioned earlier, is if there's some revenue or rights value, something of value that you can sell separate from the NFT associated with it, that can be like a dividend or other classic type of securities. So those are some of the different scenarios we see where NFTs, even though they are NFTs and they're called NFTs, and they may each be unique in some way, could trigger securities issues.
Justine, can you talk about some of the things you're seeing from the NFT perspective in Malta and the EU?
To be honest, very, very similar in terms of interpretation and application of securities regulations to the type of business model structure. As I said, there's no clarity at all because there's no regulation which specifically says NFTs are within this regime, or if they could be interpreted within the securities regime. So at the moment, it's very much operating in no man's land. It's about going to a lawyer and asking, is it regulated? Us doing a legal opinion and analysis and trying to be creative in terms of applying traditional laws to scenarios, and then making our best guess in reality, because there's zero clarity on how they're regulated. So it could be a thing they fall outside of the securities regime, and then someone interprets it to fall within the securities regime. I would say definitely look at the type of asset. So if it's just a digital recordation, if it's a magazine, but it's one thing. If it's a piece of gold, it's another thing. Look at if the NFT is being fractionalized or not. So if it's just one ratio is one asset to one NFT, or if it's fractional ownership because of returns. The way you're marketing it, so if it's packaged as an investment product, saying it's going to increase in value and you promised a return, then it could also be classified as a security. So you really have to go on a case-by-case model in terms of what you're offering and how it's structured and what the smart contract says. I would say another issue, perhaps because we've spoken a bit about securities, is in copyright and IP. So if I digitize something and basically I mint and sell an NFT, imagine, for example, Microsoft. I decide to digitize the Microsoft logo. I'm not saying that I own Microsoft or I have rights to Microsoft. I simply just create the token. And of course, when I sell it, I get a lot of money because the branding associated with Microsoft is very high. And so, of course, I sell it for a lot of money because of this branding, but I'm not offering any rights or ownership or trademark to Microsoft. How will a court interpret that scenario? Will they interpret it that you stole someone else's branding in order to profit from the situation? Or will they say, no, it's just simply token code. It has nothing to do with the real life asset or trademark. So these are issues that I think are still yet to come and yet to see. As I said, I would say it's basically what happened, way back when we had ICOs and it was like the Wild West, and then everyone was getting sued for being a security. We might see that with NFTs, which a lot of people are issuing and creating NFTs. They're not really sure if they fall within licensing or not, obviously because there's no clarity. And then it will come down to enforcement or regulation or basically someone clamping down or providing some guidance.
All right, both of you. I'm conscious.
I just want to add one interesting fact.
Yeah.
Basically, in China, NFTs are also a thing in China. And a few of the very big fintech players, such as Ant Group, who are behind, Tencent. So Ant Group are behind WePay, WeChat, and Tencent are also a big fintech company, came together and they basically created a self-regulation convention on NFTs. So they renamed NFTs to digital collectibles, and they have this convention whereby they protect and value certain concepts such as cybercrime or AML and whatnot. And they basically just regulate the market and renamed NFTs to trading collectibles because of the speculation connected with the term NFTs, just to appease the Chinese regulators and ensure that the Chinese regulators don't clamp down on NFTs because of the close association with crypto. So it could be we see certain, big fintech companies or certain similar approaches whereby, certain names come together and create certain conventions or associations regulating the market. Obviously, I don't think we will see something similar in the US or Europe, and this was a very particular situation because the big players in this space operating in NFTs are scared of the regulators clamping down. But very interesting, just because the title was self-regulation on NFTs, and there is actually a use case of this exact case in China.
Interesting. Thank you. I'm conscious of the time. We're coming up to the hour. I've got one more quick question for you both. Are NFTs for real, and are we going to be seeing them for the rest of our lives? And as a result, as lawyers, are we going to be confronted with these legal issues for the rest of our careers? Jim?
100% yes, is my opinion. Again, to go back to what I said earlier, an NFT is just a recordation of ownership, and it can be a digital asset or a physical asset. We're seeing people do NFTs of actual real estate and many other, Christie's did an art auction several years ago where they had NFTs that represented ownership of a physical asset, right? I think the technology is incredibly useful, and having a transparent, immutable recordation of ownership of many assets will be beneficial. What those assets are and what the regulatory issues are will depend. So just to touch on what Justine said about what happened in China, you can call something digital collectibles instead of an NFT. Not every NFT represents a digital collectible, right? But to the extent that it's just a digital collectible, it's a video clip like Top Shot, or it's a piece of digital art, yeah, then it can be a digital collectible. But the universe of what the NFTs will represent is much broader than digital collectibles. That's the biggest thing happening right now. But we're going to see over time, and you'll see, title to car, you'll see all kinds of things go on blockchain, and it'll be represented by NFTs, in my opinion.
Thanks. Justine, what's your opinion?
No, I definitely agree, Jim. I mean, if we had to look at the numbers, the trading volume of NFTs went from about 30 million in 2020 to about 13 billion in 2021. Yeah. So an increase of about 40%. I don't think they're going anywhere. And it will be interesting to see if the regulators catch up. Well, it depends on where you are. Apparently, if you're in US or Europe or Switzerland or wherever, catch on how they will treat and how they will treat them. So they're here to stay.
Okay. Well, I want to thank you both, for your time, energy, and thoughts. And I hope this has been profitable use of viewers' time, because I've gotten a lot out of it. So thank you for attending, and we appreciate it. And back to our sponsors.